Donald Trump has collapsed trade talks with Canada over what he calls an egregious digital services tax on U.S. tech firms. Let's go to Ryan Detrick on this, Chief Market Strategist at Carson Group. He joined us now. Thanks for joining us.
Thank you for having me back, and happy Friday, everybody.
Happy Friday. How much of a hit do you think markets will take from the collapse of these discussions?
Well, I don't think much. You look at today, what happened, at least from the U.S. market's point of view, we were up, then we were down for a little bit, then we bounced back. I mean, the truth is, this is how the sausage is made. Obviously, with President Trump, just as quickly, maybe, who knows, by Monday, we could have some different news. So if it truly deteriorates, of course, that could mix things up a little bit, but honestly, I'm not so sure. And the big theme we get into, this is still a global bull market. I know there's tariffs, I know there's inflation, and there's this and that, but reality is things still look really good to us. And this is a short-term blip, but the way the U.S. market specifically bounced back very late in the day, the last 20, 30 minutes, some big buying stepped in, we'll take it.
Yeah, Bub, I almost feel like you forgot about April and how gut-wrenching that was for investors, right, to watch some of their money disappear. And we can look back at it and know that people came back. Do you think then that this kind of comment from the U.S. president and others in that sphere is just not going to be taken as much to heart?
Yeah, I think it's a good way to put it. And boy, I tell you, I probably have a few extra gray hairs after April, so I didn't forget about that 10% drop in 2 days on the S&P 500 after Liberation Day. But I think that's the truth. And now you're starting to hear rumors. Well, maybe the Europe and U.S. have a closer deal. And yes, July 9th's that big day that's out there. Maybe they're going to push that back. It's very fluid, I guess, is what we say. But I think the reality is markets aren't going to buy it so much, because I don't think President Trump wants to go through that again. I don't think anybody in the administration wants to go through that again when they held that big piece of paper up or the big billboard up with those numbers are way higher than anyone expected. So maybe there's some specific little areas they can kind of get picky with, like specifically, obviously, U.S. and Canada. Interesting. I'm on your network today with this news out there. But we're not too worried it's going to cause a major issue like we saw in April. So
you say that July is the best month for the markets in a post-election year specifically. Yeah. Why do you think that is?
Yeah, the reality is usually May and June's not that strong. Usually August isn't that strong. So you tend to get as a little bit of a bounce. People take vacations. It's kind of light volume. But the reality, I say it is what it is. Post-election years, July is usually strong. Well, listen, the last 10 years, S&P 500 is higher 10 times, 10 years in a row in the month of July. The last 20 years, it's also the best month. So you never invest just because of the calendar. I want to be very, very clear. But the reality, we looked at this. When you're higher in May and June, like we're going to be on the S&P 500, assuming we have a massive drop on Monday, that's pretty rare because normally those 2 months aren't that great. So July actually does better. But here's the thing for the listeners. The rest of the year, so the final 6 months, when those 2 months that are normally not that great are higher, like this year is going to be. The rest of the year is higher 15 of the last 16 times for the S&P 500, up about 9% on average, which is almost double the at any time returns. There's more to it than that. I get it. But this strength we've seen, especially when things, quote unquote, should be weak, that to us is still a bull market, global bull market for that matter. But we do think the U.S. is going to do pretty good the second half of this year.
So there is a lot of enthusiasm. We've talked about records being broken a lot lately for the markets. I'm just wondering if you're still seeing any skepticism out there.
Well, we are. Recently the Bank of America Global Fund Manager Survey report, which is a real mouthful to say on a Friday after a long week. But that's like what real money managers are saying. They are extremely underweight U.S. stocks. That's right there. You've got all these various sentiment polls that are showing some more optimism, but by no means are we seeing everyone's excited. I do this for a living. People know what I do. I heard from everybody I knew back in the middle of April about why they should get out because this is crazy. This is crazy. This is going to end it all. I'm not hearing from anybody with stocks hitting all-time highs today. And I'll tell you, that to me is a good sign. We're just not seeing over-the-top optimism like you'd expect to see with markets up a lot. And again, that one final comment, it's kind of like that a ball under the water, beach ball under the water. You let it go, it starts going up, it gets a lot of momentum. The reality is this market does have a lot of momentum to it. And now with the S&P in its first all-time high since February 19th, we think this rally can continue at least through July and likely further.
Okay, so
July could be a still good month.
Where are you looking to put investors' monies these days?
Yeah, with specifically on the U.S. side of things, we still like large cap, but we also like the cyclical areas. Your areas like financials, industrials, technology, kind of things that got you to the dance. Those more aggressive areas that'll do better if the economy does better. We think the economy is stronger than what most people think. I mean, let's not forget the best leading indicator we have about the economy is the stock market. So hitting new all-time highs in the U.S. probably means the second half will be good. And then globally, I mean, we're an RA. Carson Group's a very large RA based in Omaha. We have a very large percentage of our assets in developed international, right? We think, places like Europe and Canada and Japan, developed international could do really well also. We're still U.S. heavy, yes, but for the first time in a couple of years, there's more opportunity. So it's just a bull market, and let's not forget it's a global one.
Talk to me about where you expect the Federal Reserve to land in July. Powell's been talking about we have to get clarity on the tariff situation. We need to see what shakes out. What's your expectation for July?
Yeah, probably nothing in July yet. And I know Waller came out and talked kind of, dovishly. I think Bowman talked dovishly. So some members are kind of saying, hey, maybe July's on the table. Powell had a chance to say that this week. He didn't. But for the first time, I guess probably this whole cycle, he actually said, we probably would have been cutting at least twice if we didn't have these tariffs to worry about. And we understand the tariffs are still there and there could be some higher prices coming. But we've been in the camp the Fed should have cut the whole time. So we're not so sure they're going to cut in July. But we still think 2 cuts later this year, maybe starting in September, are likely on the table, and that could help unlock a lot of problem in the housing market here in the U.S. Manufacturing's been kind of wishy-washy at best, and honestly, small businesses, which don't like higher interest rates, they've been kind of hindered as well. So some reasons the Fed should be cutting, and we expect them to, probably starting in September.
Okay, so what do you think Powell has to see before he does that?
Well, I guess it's plain and simple. He doesn't want to see a massive spike in inflation and then blame it on the tariffs, right? And we haven't yet. I mean, just today, the core PCE, they call it the Fed's favorite measure of inflation, came in as expected. We had the CPI and the PPI here in the U.S. maybe 2 weeks ago, I think it was. Both of those lower than expected. So he just doesn't want to see a big time spike in prices. And I don't think we will. Honestly, I don't think we will, because I know we can talk on this for 30 minutes. I'll make it real quick. We are finally starting to see rent prices. We're starting to see shelter finally starting to come back in the United States. That's going to put a lid on inflation. So maybe parts of inflation go higher because of tariffs, but there's some other parts we expected to finally start to come back. It's coming back, and that's a huge part of overall inflation here in the U.S., and that can, again, put a lid on inflation, giving Powell cover to start cutting rates.